Hello, everyone, and welcome to another Tech Tuesday with Out of the Box. Today, we're talking Bookkeeper versus CPA, maximizing your advisory relationships. We have a team of bookkeepers and accountants excited to help your business grow through custom tailored services and discounted software solutions or training for your team. We encourage you to reach out if your organization is looking to optimize its accounting infrastructure. Today, we welcome Brista Mayfield as our presenter. Brista joined Out of the Box in 2022 as Director of Accounting and Data Services. With more than 10 years of experience as an accountant and controller, Brista helps clients with recurring accounting and cleaning. Brista's wealth of expertise is often tapped by our team and that of many of our partners, so we encourage you to engage. Ms. Jeanette Schwartz-Rattan, Director of Marketing here at Out of the Box, and I will be just a few housekeeping items before we move on. This session is being recorded to give you the opportunity to really engage and ask any questions you might have. The recording will be shared with you as a resource after the webinar, along with the deck, where you can revisit any key points and information you'd like to review, share it with your colleagues, or of course, keep it for future reference. There will be time for questions at the end of the presentation. However, if you're hoping to dig a little deeper into something Brista talks about, or you need some clarification, feel free to chat those questions to us and we can address those in real time. A little bit about Out of the Box, if you haven't joined us before, or maybe it's been a while. Here at Out of the Box, our mission is to empower entrepreneurs with the QuickBooks-based financial tools, services, and insights they need to thrive. Out of the Box is the premier choice for QuickBooks accounting services, boasting over 30 years of experience and a track record of exceeding the expectations of more than 50,000 satisfied clients. Our comprehensive accounting solutions save you time and money while providing you with the financial accuracy, security, and insights necessary to grow your business. As an elite QuickBooks solution provider, we are able to offer you exclusive discounts and pricing, so please be sure to connect with us before purchasing your QuickBooks solutions. With that, I believe I've covered all of our housekeeping items, so I'm going to pass the baton to the lovely Brista. Brista, it's all yours.
Thanks, Jeanette. Hi, everybody. Thank you for joining us today. I'm going to go ahead and share my screen to begin our presentation. We're actually going to start with a poll question. So if you guys wouldn't mind, just so that I know who I'm talking to today and get a better idea of our audience, what describes your role in your business. And that kind of helps drive our conversation a little bit. So we'll give you a little bit of time to answer that question, and then I can see who I'm talking to today. So before we get going, I want to make sure we have a good idea here. So
they're coming in quick. We've got about 80%, so we'll give it a couple more seconds.
Sure.
People can vote. And 3, 2, 1. I'm going to close and share.
Awesome. We've got a good variety of people attending today. So I'll just try to talk to everybody, all these roles here that we're seeing. So, so first off, I want to start talking about bookkeeping versus accounting. What are the difference between the two? There are different aspects of each. So what do we mean when we say bookkeeping, and what do we mean when we say accounting? And then also, before we get started, I want to ask another poll question. So how do you know if your business is having a good year? You can only select one answer, but I want to get a good idea of how you guys view that, especially those bookkeepers and those business owners. I know there's a lot of different indicators that you can use. So just want to get a good feel for that as well.
All right, we're up to 65%. So we'll give it about 5 more seconds. 3, 2, 1. I'm going to close and share.
Awesome. Reviewing the financials is our main answer here. So I'm glad that you answered that. You're in the right spot. So 3 questions. I want to jump right in and say 3 questions every business owner asks. How much money did I make? Where is it? And as we are rounding out the year, how much will I owe in taxes? Usually that's asked throughout the whole year, but especially now as we're getting into the end of the year. And that's something that we're going to start focusing on in January if you are a regular calendar year For tax filing, that's a big question right now. How much will I owe in taxes? The answers here to every single one of these right now, for the purpose of this presentation, is the answers rely on good bookkeeping. So good bookkeeping is part of a cycle. We have financial management with QuickBooks. So we have that bookkeeping, efficient and accurate bookkeeping. We'll talk about what that means here in just a second. But all these three things here work together. And bookkeeping is just part of the process. We have your QuickBooks software that you're using, whether that is QuickBooks Online or QuickBooks Desktop. You have the bookkeeping that happens within that software, but then also within your industry, you do have your own unique processes and your own unique technology platforms that feed into QuickBooks. But with the bookkeeping side of it, we also need to understand what those unique processes and what those unique platforms that you're using. We also need to understand that as well, and how they integrate with QuickBooks. And then as the bookkeeper, knowing how to use both of those systems in order to provide accurate bookkeeping. So in that way, business owner, you, the business owner, can answer those three questions, or you, the bookkeeper, you can understand, you know, where you fall into this process here. So what is bookkeeping versus accounting? So bookkeeping is just a piece of the accounting puzzle. With the bookkeeping, we want to organize, record, summarize that financial information in a systematic way. Then when we look at the accounting side of it, the system of recording and summarizing the financial transactions, but we also want to analyze, verify, and report those results. So I like to liken it to your cement versus concrete. So cement is an ingredient of concrete. And so bookkeeping is a piece of that accounting puzzle, where the bookkeeper is recording the entries, but the accountant, does the adjusting or the closing entries and that final analysis reporting piece that is needed either for the end of year, for tax reporting purposes, turning it over to the CPA, or those final adjustments that are needed in order to close out a month completely. So to dig in just a little bit deeper, bookkeeping is that part of the process. So what that means is we are focusing on tracking, recording, and organizing those financial transactions as they come through the bank feed, or if you're manually recording those transactions with an entry or with bill payments, or however those are being recorded. That's the role of the bookkeeper there, is to make sure that those are being tracked and recorded. Also posting debits and credits if we have journal entries that we need to be entering in. Preparing any source documents for those transactions, operations, and other events of the business. Bookkeepers may play a part in paying the bills. Depending on the level of involvement of your bookkeeper, you may see those bill payments, doing some billing or doing some invoicing, processing payroll, managing timesheets, anything around the payroll piece of it. And then also preparing financial statements if, once we have all those final adjusting entries in there. And really, we're zeroing in on the administrative side of the business's financial past and present. So keeper of the documents, or keeping of the schedules that we see, or that accountants may need to reference when they're doing their closing entries. And then on the accounting side, interpretation of the bookkeeping data. So as the bookkeepers will keep everything organized and nice and neat, the accountants, will be able to interpret that data, review and analyze those statements, the financial statements, any other adjusting entries that may be needed. Where we have the special depreciation entries at the end of the year, or if there's a new amortization or anything like that needed from the accountant, they are doing those entries. There might be an audit that might be needed and they need to be involved. The accountant does. And of course, that goes back to, if we're in an audit, having good records that the bookkeeper is able to keep. So we always work together on that and trying to get all the information out for those audits. And then any of those relevant tax returns. That's where the accountant comes in. We want to be able to present that data from the bookkeepers and be a little bit more subjective, as we're talking about interpreting the data. What do these numbers mean, and how can we improve the business? Any other, as I mentioned before, with those adjusting entries, the depreciation, the bad debt entries, any accruals or anything, any schedules that may need to be prepared in order for the bookkeeper to use them, or any reversing entries as well. Those are, bookkeepers would rely on the accountants and to do that, and work together to get those entered in and get everything entered in properly and verifying the data, so that we have a nice, neat set of financials, especially as we get to filing taxes. We can wrap it up with a nice little bow and send it in for taxes. And one of the things that I just want to touch on, as far as, what bookkeepers are involved in, we're looking at, bookkeepers are looking at an account, which is a place in the books used to record business transactions. Just a little bit more in depth as far as what bookkeepers are doing versus your accountant or your tax preparer. Where bookkeepers are posting entries to the accounts and adding or subtracting to the account balance. Then your accountant is really looking at the ledger as a whole, taking a look at those financial statements, and then allows them to look at, from the 30,000 foot view rather than deep in the weeds. So with that ledger, they're looking at the collection of accounts for a particular business. And we may even have subsidiary ledgers that include more detailed items. And so just a different way to dive deeper in that role of bookkeeper versus accountant, what we're looking at on a day-to-day basis and what we're using on a day-to-day basis. And then when we talk about accounting periods and cycles, on this graphic here, we have normally what the bookkeeper is responsible for, and then normally what your accountant is responsible for. These may adjust based on your business, how your business flows, and it's always good to revisit and something to discuss internally as far as how your processes are being handled. Your accounting periods can last for whatever time frame you're looking at. It can be a week, it can be several weeks if you're on something like a 4-4-5 schedule, a month, quarter, or a year. So most times your accounting periods last, the maximum length is about a year, because that's when our taxes are filed, or other reporting requirements. And we'll talk about some of those benefits to the bookkeeping processes, and where the yearly cycle would come into play. Monthly, we're closing out monthly. That may be what that particular cycle looks like. We're closing out a period. And many businesses, when we talk about a yearly type cycle, they adopt the calendar year as their year end. Sometimes we might see a fiscal year end, and that may just be dependent upon, different scheduling needs for other businesses and everything else involved. But it's just a different end of year type schedule that you're looking at. It may not be the 12/31 and year end. But with those periods, we have these cycles within it. We have the individual transactions that are being recorded, as I talked about with the bookkeeper, whether that's from a bank feed or from manually entering in the transactions, posting any journal balances to the general ledger, as discussed with the accountant, preparing the preliminary report. So then that way, as we also talked about with the accountants, they can do the analysis and they can do any other adjusting or closing entries that are needed. And then they can prepare those final financial statements. So this can look different for each of those accounting cycles, depending on if we're looking at it on a monthly basis or if we're looking at it on a yearly basis, because we are getting ready for the tax year. So now when we talk about I want to talk about the importance and the benefits of accurate bookkeeping. So we really want to focus on answering those 3 questions that every business owner asks, and being able to look at what are the benefits and why do we want to have accurate bookkeeping throughout the year, not just as we're getting ready to file taxes for the end of the year. So some of these items here, with the importance, we talked about, the year end and going through that accounting cycle for other reporting requirements that may be needed outside of tax filing. You might want to provide this information for banks so that you can open up a loan, or open a second location. Or if you need to sell your business, you want to have those accurate bookkeeping records already prepared. And so we're not scrambling to try to get everything completed quickly in order to provide these financial statements. So having accurate bookkeeping throughout the year allows us to provide these things listed here for advisors, coaches. Protecting your investment, just knowing where you stand as a business is always really nice as you look at it throughout the year for you business owners. And then the bookkeepers, having that second eye or second set of approval, because we're discussing these financials and why do I have these things categorized the way that I have them. And that way everybody's on the same page as we're looking at financials. And then being able to provide any other information on tax returns is, of course, another importance for having that set of books being accurate. Then as we look at the benefits of accurate bookkeeping, mentioned just a little bit earlier about having the correct transactions, or the transactions categorized correctly. Sorry about that. In different categories. We have we want to have detailed records of all of those transactions. Where is my money coming from? What have I paid in wages? What am I needing to pay for taxes based on how everything has been organized? You can look, and if you look at a profit and loss, you're able to drill into each of those accounts to see what is the detail of all of this. And you can really get a deep dive and get a good look at what your financials are and how things are being categorized. And as we talked about being organized as a bookkeeper, this is, click of a button and we're able to grab that information based on what is needed from the business owner or even the accountant or any other advisors that are asking those questions. Keeping being the document keeper and the bookkeepers keeping track of those records is also a good way to stay organized, but also have those detailed records and have backup for those records too, to be able to provide the information as to why things are being done the way that they are. And then, as a business owner or as somebody who is analyzing these financials, it gives you the ability, having the accurate bookkeeping gives you the ability to make informed decisions. So not only can you set goals, but it can also help you identify any problems that may be there. With accurate record keeping and accurate bookkeeping, you can discover any of those discrepancies between financial statements and what's being recorded. Drilling into those transactions, like I talked about before, being able to click and see the detail of each GL account will allow you to analyze and make decisions, set your goals, and then make adjustments as needed. We also, they're having that accurate bookkeeping, they're accurate indicators of measurable success. So comparing prior periods, we identified a problem in this period, we made an adjustment, and now in this period, we can see that improvement, or maybe we didn't make the right change, or, it helps you analyze those things, especially if you have confidence in the bookkeeping that's being done. Financial statements that we're looking at, as bookkeepers, the bookkeepers are categorizing transactions, reconciling accounts, making sure everything is ready and presentable and accurate. And then those financial statements that can help with the decision making based on the data that's in your file are those balance sheets. So where are my assets at, my liabilities, and what's my equity like with the business? Same thing with income statements. So what money has come in and what money have I spent in order to make that money? And it all goes back to those three questions that every business owner asks. And having these accurate financial statements can help you make a decision and can help you answer those questions with, outside of the let's have good bookkeeping in order to answer those questions, you can actually have answers to those. And then also the cash flow statements. So where is my money going and where is it coming from? Those can also help with those decision making, the reports for decision making. And then we're better prepared for tax season. So at the end of the year, we like to discuss this a lot more than throughout the year. And especially right now, we're getting to the end of November. Yeah, end of November. December is on Friday. So tax season is going to be here before you know it. If you're on a regular calendar year, you're going to blink and your CPA is going to want your financials for 2023. So if we can start now, if we don't have any processes in place or you need some help, right now is the time to start doing that. Or let's just take a look at what's going on, because we want to make sure that we are prepared for tax season before tax season actually hits. So then that way any adjustments can be made that need to be made. And then sometimes with accurate bookkeeping, we can quickly provide any documentation that a business may need to provide. So any sort of financial transaction detail, financial statements, tax compliance, cash flow reports. Those things may be requested by the government, and we need to provide those. So if we know and we have confidence in that bookkeeping process, and we know everything has been kept up to date, we're accurate with those numbers, then it's easy to provide that documentation. And then I want to talk about best practices. So we have a bookkeeping process. So what is that going to look like? What is the best way to identify maybe areas that we need to improve, or anything that we may need to analyze back home in our office and how things are functioning? What are some different things to look for? So first thing I want to talk about is that chart of accounts. So utilizing the appropriate chart of accounts for your industry and using standardized account numbers. So with the account numbers, we're using a logical sequence of numbers and assigning those numbers to each account in your chart of accounts list. This allows you to create some efficiencies within your reporting and with your accounting system. We can look up accounts with a couple of digits or several digits rather than typing in the name. You can be a little bit more specific when you're selecting things, and we know we're not going to accidentally select an income account when we needed to select an expense account just by using those numbers. That system, the numbering system, is an easy thing to toggle on and toggle off within your QuickBooks account. If that's something that maybe on a certain set of reports that we need to deliver, we don't want account numbers on, we can turn that off. It just helps on the accounting and the bookkeeping side. It helps keep everything organized. You're able to organize your chart of accounts based on the numbering rather than alphabetically like we normally see. If you are in desktop, you can move those accounts around so that you can visually see things a little bit differently on your reporting. In QBO, it's not as easy to move those accounts around. So that's where maybe the numbers come in handy. So then we can organize that a little bit better. Within your industry, having that right chart of accounts within your industry. Are we construction industry? Are we HVAC? Are we a restaurant business? Each of those industries have an appropriate chart of accounts to use for that particular industry, and we can make sure we're categorizing things properly. And it's good to be able to have that for tax purposes as well, because each of those GL accounts will be reported on a tax return differently as well. So we just want to make sure we have the right chart of accounts for the industry that you are in. And also being able to automate things as discussed with your CPA. Working with them or with your bookkeeper, working with them to get an appropriate chart of accounts is something that you can start looking at now. Evaluate with your CPA or your tax preparer for sure, because any adjustments that you make may affect how your financials look. So follow up on that piece of it before you start making those changes. And then when we look at, I talked about using numbers, there's a standardized way of using those, and not everybody, it's not this is the way to do it, but, the general suggestion is having the account numbers that start with a 1, those are your assets. Account numbers that start with a 2 are your liability accounts. 3s are equity. 4 is income. 5 is cost of goods. 6 is expenses. 7 is other income, and 8 is other expenses. Now, whether that's 4, 5, 3, 4, or 5 digits, and that numbering system after that, that's up to you and how you decide to use that for your benefit when you're looking at your chart of accounts. But it definitely helps with consistency. So something that you can take a deep dive if you have a second to take a look at what you have, using those account numbers, and maybe also analyzing that your current chart of accounts. Is there anything that we need to inactivate? Is there anything that we don't need anymore? Is there anything that we might need to, adjust a little bit as to how we're using it? Taking a look at all of that is going to be helpful for you. Other best practices are balancing and recording sales and cash receipts daily rather than weekly or monthly. This just helps with keeping up with that cadence of money coming into the account, money going out of the bank account, and it helps you identify maybe where issues might have occurred if we're doing it daily. And also too, daily, weekly, monthly, the suggestion is daily to help you stay on top of it. Sometimes you can't get to it, and we save it for tomorrow, and then we save it for tomorrow, and then we save it for tomorrow, and then you blink, and now we're at the end of the month, and I have a whole month's worth of stuff to do. So just keeping up on a regular cadence is really good to help, one, identify any issues, but also to make sure that we know what our financial where we're at least cash wise throughout the month if it's happening daily. Reconciling your bank account. So, and your credit cards and loan statements. So if you're using a bank feed feature and you have a balance that is in QuickBooks and then the balance from the bank and they're matching, great, we're moving on. That's fine, but you also want to actually reconcile to your bank statement that you receive monthly or a credit card statement that you receive monthly. This is just that extra level of verification. We want to double check for any duplicates or anything that might be missing or anything that we posted incorrectly. We want to make sure that we are reconciling those monthly. And then credit cards, they're normally off cycle. I don't see many that close at the end of the month, but reconciling your credit card on the statement date, whether it's the 18th or the 2nd or the 27th, you're reconciling it based on the date of that statement and the balance. And sometimes we'll see items that have been posted to the 27th, but they haven't cleared yet. So we want to make sure we're checking on that with the reconciliations. And then the same thing with the loan accounts. We may have statements available monthly with loans. It depends on the bank, depends on the access. We might only get paper statements from the loans to reconcile to, so we might be a little bit behind, but using those loan statements to help account for interest or any new draws that have happened or interest income that you might get, making sure that you're accounting for all those things. And our loans are also balancing. So not only do we know we have the right amount, the right balance in your bank account and the credit card, but we also know that the principal amount due on the loan has also been reconciled. Just to help track that throughout the year. We talked about, the sales and cash receipts daily, bank account, credit card monthly, loan accounts monthly if you can, and if you have statements, then we're recognizing interest throughout the year rather than one time at the end of the year. It just helps you get a good eye on financials month over month. Same thing with any other, line of credit or other SBA loans, those types of things. Again, if you have the statements, I know banks are a little bit different as far as what's available, but it's very helpful if you do have it available to you throughout the year. And then we also want to make sure we're watching our accounts receivables closely. Some of you may be using a front-end system that syncs in with QuickBooks, whether it's with desktop or with QuickBooks Online. That accounts receivable account, you're comparing what is in that front-end system and what we have in QuickBooks, and it's a very good double check. Do I have all the information from my front-end system in my QuickBooks software, and are our reports matching? Are we missing things? If your bank reconciliation, your bank feeds or your bank entries, cash reconciliations being done daily, if something's not being caught with that part, with those processes, watching your accounts receivables closely, comparing the two systems is a great way to catch anything else that might be happening. If you're not using a front-end system, we're still watching that accounts receivables report, because I want to make sure that any balances here I know are accurate. Do we have all of our payments recorded from customers? Do I have a duplicate invoice maybe that I need to adjust? It just helps keep everything in line if you're watching them closely. Now, that may mean weekly, that may mean monthly, quarterly, whatever that looks like, but it should be part of a cycle, of an accounting cycle that you're doing, whether it's Bookkeeper. Mainly they're the ones working in the file more often than the accountant, but you have the backup there. These clients do have these outstanding invoices that need to be paid, and so we've got the verification as well. And then same thing as well, paying your bills on time, having an accurate accounts payable, so that bills are being paid and we're getting them done in a timely manner based on the net 30s, the net 15s, the due on receipts. We're making sure we're paying our bills on time. Is there a process that needs to be put in place in order to pay bills on time? Same thing with your receivables. Is there a process we need to put in place to make sure we're watching that account closely, but also collecting from customers when it's needed? So it works in both receivables and payables, as far as watching it closely, receiving money or paying the bills on time. What types of systems do we need in place to make sure that that's all being done in a timely manner? This is something that we can also help look at, and something that we can come alongside you and take a look at as well. And then as we talk about inventory, you have two different kinds of inventory, and it is best to figure out what works best for you. So with a front-end software, so we're going to go back to, if you're using a front-end software, does that software track your inventory, and does it sync into QuickBooks? Something to take into consideration is how that front-end system syncs if you're using that feature, because some of them may have it available to you, but it's not turned on and we don't want to use it, or however that works. But just take a look at your inventory piece of it if it's applicable to you in this situation. So there's two different kinds of inventory and two ways to track inventory. We have our perpetual inventory, so keeping track of every purchase and every sale of every item. And then we have our periodic inventory. That's where we do account, we record all of our purchases, we do account, then we do an entry at the end of the month to true up what the balances are in QuickBooks. It's less accurate, but less time consuming. But your perpetual inventory, that's something that might be tracked inside QuickBooks or inside that front-end software. More accurate, but a little more time consuming, because we're trying to verify all of those things going in, coming out, being purchased, being sold. So there's pros and cons of each, and you want to consider those for you and what you're currently doing, and if there needs to be any improvement in the process. Whichever way you're doing that, have a time of the year or a certain time set aside to reconcile that inventory. Again, especially as we're coming to the end of the year and we're talking about tax time, reconciling your inventory is going to be something that will need to be reviewed, and something to take into consideration as you're doing those counts and as we get to that part of the year. And then we also want to talk about closing the books. So whether that based on the discussions with bookkeepers, accountants, owners, what does that closing your books process look like? There is an actual feature that you turn on inside of QuickBooks Desktop or QuickBooks Online. There's a little button you click and say, I want to close my accounts as of this date. Generally, that happens after taxes are filed, so we'll close the prior year. Throughout the year, you may have quarterly that you close the book, so no prior adjustments can happen. That's something that, again, have a conversation, bookkeeper, accountant, business owner, admin person, whoever's in there, have a conversation about how to close the books, when to close the books, and what is the best process for that? Who has the password to override those if we need to? Those types of questions that need to be answered and addressed internally. If you do have a front end system, watch how that affects the sync. Sometimes closing the books, and some that we've seen at out of the box too with different front end systems, it may affect, closing the books may affect how those front end softwares sync with QuickBooks. So double check that, maybe test it and see how things work with that closing of the books. But a conversation that needs to happen, again, internally with your department, and see what is best for you and your business and how we want to do that for moving forward. And then we want to maintain accurate and complete records. As we've talked about this whole presentation, accurate bookkeeping, confidence in your bookkeeping, reconciling those accounts, and not just your bank accounts, but other liability accounts or loans, or keeping everything current. So your general ledger current. Do we have new accounts to add? Talked about that a little bit. Do we need to add new ones? Do we need to inactivate some that we don't need? Do we need to change a name on one because we use it for a different purpose, or however that looks? But review your GL, your general ledger, and make sure that it's current. And then plan for taxes throughout the year. This is a good time for us to start having that conversation about taxes, because we want you to be a little bit ahead of the game. But if we can start planning for taxes throughout the whole year and make those preparations and implement processes throughout the whole year, that makes it even easier when it comes time for taxes. So definitely planning for that throughout the year, implementing different processes, what else needs to happen to help us accomplish tax filing a little bit easier each year. And then keeping personal and business finances separate. We're all human. Sometimes we'll see, oopsies, business, or my personal, use my business card to purchase, dog food or something. We're all human, but doing our best to keep everything separate, so that when it does come time for tax filing, we've got everything separate. But also, when you're just trying to analyze a set of financials, knowing that everything in here is for my business, also allows you to make the proper decisions as we're looking at reports. And then maybe as we're looking at what does my bookkeeping process look like right now, we move from a manual to digital bookkeeping. Nowadays, most everything is digital, but sometimes there might need to be some steps that need to happen in order to get everything fully digital. So what needs to happen, take an approach of what all needs to happen, but we want to be meaningful about these moves. We want to not do everything all at once, but let's take it one little step at a time, which allows everybody time to familiarize themselves with not just a software, but what processes are in place. If you can handle this step first, then we're going to move to this step, and having a plan and a staggered approach, but meaningful shifts that happen, because we don't want to switch to one process or one system all at once, and then everything falls apart. We got to go back to the drawing board anyway. So be very methodical about that. And like I said, most of us here are all in the digital bookkeeping space, but there might be some pieces of your process that would need to go from manual to a more digital type world. And then we're going to talk about a little bit about separation of duties. So having multiple people involved in your accounting process, the bookkeeper and the accountant, we have somebody working in the books every day, doing the reconciliation, doing those things, but then we have the accountant reviewing those. Having a second set of eyes on those financials is always a great idea. Even internally, we have bookkeepers, and then we have people that review the bookkeeping, and then it gets turned over to somebody else. So we always have multiple people in that process. Now, it may not just be with bookkeeping procedures, but bill processing or invoice processing. We have one person in charge of, entering the bills that need to be paid. Then you have somebody else paying the bills, and then you have somebody else writing the checks, paying the bills, recording the bill payments in QuickBooks. I'm sorry. And then you have somebody else writing the checks, and then you have somebody else sending it in the mail, or however that looks like. But the idea is we're separating all the steps involved in the money movement process so that we've got double checks, we've got multiple people involved in the process, and then kind of levels out that risk a little bit. So not just with bill payments, but you can apply that to receiving money, recording the deposits, actually making the deposits, and keeping everything with different people. Now, it also depends on your business size too. And you know, there's limits to how many people you can get involved in the process, but doing something that works for you and for your business as we're talking about separating those duties. Signature stamps, don't leave that lying around. We want to keep that locked up in a nice, in your filing cabinet, locked up. And not everybody has access. Not everybody has the key to that. Just general practice, the person signing the checks, don't just leave that in a drawer that anybody can open and access. Owner review and control of bank statements. So before we say that these financials are ready to go, the owner takes a look at a reconciliation or takes a look at a bank statement so that they know that everything that goes in and comes out was actually for the business. That the level of involvement there may look a little different for your business as well, but something also to consider. Reviewing copies of checks. Sometimes those bank statements do include the check record, the images as they're being cashed. So when that owner does review the bank statements, they can look and see what checks were cashed. And then taking a look at the access to your accounting software. Depending on the level in QuickBooks Online, you can adjust what type of access they have. Who has admin access, who has sales access, who has complete access, taking a look at who has what access to your software, and maybe even looking at customizing roles or setting up different parameters within those users. Just something to take a look at and see who all has what access is always a good thing to review. And then looking at cash versus accrual. So cash is money in the bank, money out of the bank. What money came into my bank account? What money went out of my bank account? So no receivables and no payables, really. It's just money in, money out. That's essentially your cash basis. Accrual basis is when you look at, okay, what have I invoiced? What jobs have I completed? And what have I invoiced? What bills do I need to pay versus maybe I don't have to pay them until later? So it looks at it more on jobs, materials needed for those jobs, and you can see it on that as well, regardless of when the money was received or paid. So if you received a deposit, you completed the job, then you received the final payment. If that happens across several months in a cash basis, you would recognize the income when the deposits came into the account. On an accrual basis, you're recognizing it when it was invoiced. So there's different ways to view your financials. Both are beneficial. Cash is normally used for taxes, but seeing it on an accrual basis, if the system allows, and if if everything syncs properly, and time, there's a time that you have to look at too. How, what is the time cost benefit here? But seeing it run on accrual will also help you analyze, okay, in October, I brought in, I had these jobs completed by, I had to spend this much in materials, rather than when money was received and when money was sent to other places. So just something to consider. You can toggle between the two on reporting. You can toggle between accrual basis and cash basis to see the difference, as long as you're tracking on accrual. And it allows you to toggle between the two and actually see a difference. So some do's and don'ts, as we talked about best practices, now we want to talk about some do's and don'ts. Don't assume that everyone knows proper bookkeeping procedures or knows how to use QuickBooks. You may need to provide training in order for that to happen. High level overview, we can navigate a little bit, but knowing those proper bookkeeping procedures, and knowing how to use the system itself, the QuickBooks system itself, or any other front end system or other unique softwares that you have, knowing how those integrate too. Not assuming that that just is going to be something that can happen overnight. There might be some training. And don't try to make your receptionist a bookkeeper without being able to provide training. There's different steps that need to happen with different systems and different procedures. And so being able to provide that training for somebody within the business, an admin person, and we want to switch them to bookkeeping, there's processes and stuff that would benefit to allow them to have in order to provide proper bookkeeping, because we want to go back to that accurate bookkeeping. Those 3 questions that every business owner asks. If you're setting yourself up for success, you're also setting up your bookkeeper for success as well, along with the accountant. So with all that said, how we can help, we can be your partner in bookkeeping. I oversee part of our recurring team on the franchise side, and we do have a team of bookkeepers. Same thing with non-franchise and our other recurring bookkeeping department. We have bookkeepers that are ready to help you in whatever aspect you need, as often as you need. And then we have experts that can help review your file. Are we ready for filing taxes? Or there's some things that we might need to clean up? Do we need to consult on different pieces of your accounting process or your bookkeeping process? Kind of like what we talked about with those best practices. Are there some things that we might need to identify in how things are being handled? Different ways that we can help, but don't hesitate to reach out and see if that's something that we can come alongside you and help you do, especially as we get into tax season. So always a good opportunity and a good time for you to start taking a look at those things before the rush. We all know it's harder to find a tax preparer in April than it is in November or December. So starting that process now is always super helpful too.
Excellent, Brista. That was amazing. Thank you.
Yeah.
We've got a couple of questions in the queue here for you. Can you talk a little bit more about a 4-4-5 schedule for those who might not know what that is and when it's best to use it, when you might use it?
Yeah, we have 4-4-5 is a 4-week cycle, a 4-week cycle, and then a 5-week cycle. So when you're looking at reporting periods, you look at the 4 weeks, and then 5 weeks. It overlaps months. So we've seen it used in the restaurant industry, where we have that 4-4-5 schedule. It's beneficial if you can identify those weekend type cycles. It's a little bit harder to use reporting outside of customizing the date ranges. But it's definitely something to look at and see if it's beneficial in your industry, outside of the normal monthly. So you'd use it instead of the monthly cycle. So.
Gotcha. Excellent. And then in terms of inventory, the perpetual versus periodic, can you talk about some use cases where one might be preferable over the other?
Yeah. So let's say a smaller business that you may only have 3 or 4 types of things that you're using, is easier to track on a perpetual cycle where you have everything coming in, everything going out. You have few materials to track, and you can be a lot more accurate with that. Or as a business owner starting out, using that perpetual inventory type tracking and getting the system in place so that when you do grow into a bigger scale, you already have a process in place and it works, and we know that it's tracking properly. Periodic is, maybe we have pipes that we're purchasing for plumbing. If that's, we have PVC pipe that we're purchasing for plumbing. And it might be different lengths and different types and different, it's easier to track outside, maybe in a spreadsheet, and we do it once a year because we're purchasing and using so many times, that it's just easier to track on a spreadsheet and do a count once a year. So it all really depends on, on you, size of your business, how much are we tracking? You might even have use that inventory feature in QuickBooks Desktop where you're tracking pieces. And that's a definite, good way to use that perpetual inventory where you're building like a system itself within the inventory tracking feature. So.
Excellent. We just got another question. Can you recommend an app that syncs third-party inventory with QuickBooks Online? We use a third-party inventory system called Albert.
There's a lot out there, and it depends on your industry. So I can't, there's not one that I'd recommend, because there's a lot of other pieces that might go into it. What type of industry you're in, how much you're tracking, does that third-party inventory tracking, does it also need to sync in with your front end, where you're tracking your invoicing and your customer information too. So there's a lot of different things to consider when you're looking at that, just because everything's online, and it's not, they're in a perfect world, it all integrates with each other and everything works, but some of them may have different limitations too, as far as where it can sync and how it syncs and what information it needs. So I would probably ask more questions before having a good recommendation, one type of recommendation for you.
Yeah, I was just going to say, this came from someone named Ellen. Ellen, I'm going to reach out to you after the webinar to ensure that we hook you up with one of our service reps. That's one of Out of the Box's key differentiators, is that we know the ecosystem so well and so many industries so well that we can help you with a lot of those types of questions. So we want to make sure we get that question answered appropriately. I will have somebody reach out to you. So thank you. Oh, she replied, we're in manufacturing, only monthly.
Okay.
I don't know if
I would say diving in with a consultant is probably going to be the best way to get that recommendation, because one question may lead to 5 more. So just to make sure we get you in the right spot. So.
Yep, we'll reach out to you, Ellen.
Yeah. Okay.
All right. Well, that was excellent, Bristol. We've had some comments from the audience that it was a really great session. So thank you so much for your time and for your expertise. I want to thank our attendees also for their time and for engaging with such great questions. If any of you have any additional questions that arise post-webinar, or you want to get started with a needs assessment, you can feel free to reach out to one of our experts at the phone number or the email address, or of course our website that's on your screen right now. And as a reminder, this recording will be shared with you later this afternoon. I think that's all we've got for you today. Thank you again, and have a great day, everybody.
Thank you. Yeah, thanks everyone.